Yo, what's good, boys? It's Max here, back on the YouTube video. So today's video, it's currently April 7th, Tuesday 2026, and today I'm going to be recapping price. There's 3 potential trades you could have taken. There's this entry off open here. I'm going to recap that one. There was this discretionary short right here. Going to recap that. And lastly, there was this 15-minute con down here to previous day low. I'm going to recap all of these trades, show you guys exactly why I actually didn't trade today. Kind of go over the pros and cons of all these setups. Firstly, let's go over my trade copier so you can see daily P&L zero trades on the day. 0 trades on the day. Currently trading 19 funded accounts, and very shortly here I'm going to purchase another 20 funded accounts. I'm going to get 10 more Apexes. I'm going to get 5 more evals on Alpha, 5 more evals on Tradeify. So very shortly, next week most likely, I'm going to be trading 40 accounts, looking to get those 20 passed as soon as possible. But yeah, let's get into price. Once again, if you're new, leave a like, leave a comment. Any questions at all about any of these trades, leave a comment below and I'll make sure to respond to you. Also, if you're new, I live trade every single day in my Discord. Go ahead and check that out, link down below. But yeah, let's go over the first trade. Or firstly, let me go over kind of what I was looking at going into market open today. So this is kind of where market was sat at. I went in with kind of more of a bearish bias, just due to the fact that if you see here on ES, right, we formed the SMT at this major high. So I think that was previous day's high, if I'm correct. Yeah, previous day's high, right? We can see overnight price came down, and what did it do? Formed the SMT. So basically, from this point, we can expect the SMT to hold. Also, if we turn on our session profiles, we can see we already swept out Asia, already swept out London. Actually went into the day with all sessions swept out. So I actually was going into the day expecting chop, just due to the fact that, right, high time frame wise on the hourly, right, we're really choppy. We're in chopping conditions. You go down to the 15-minute chart, and all session liquidities have already been taken out. Usually when all session liquidities have already been taken out, we're kind of like in seek and destroy conditions, meaning like we go higher, we go lower, we kind of keep that kind of consolidation. Now with the Iran war and everything, it looked like market did want to move today, which is cool. But I went into the day expecting chop. Let's keep that in mind. We also, right, if we're going to be bearish from this point after we put in the SMT, it's like, what are the objectives? This was our first objective, and we can see that was already swept out. That was also Asia low. So going into the day, we kind of already took our immediate draw, which makes this low high resistance and protected. So we both basically are protected on both sides. We have a SMT protecting this high right here, and then we also have swept out Asia low protecting this low right here within this gap. So kind of into the day, I was like not really looking to take a trade. We now did have this internal low right here, which we edged, which we could use as a drawn liquidity. Also with this previous day low right here as our drawn liquidity, if we go to the daily chart, you can see that was our previous day low right there. So kind of going into the morning, right, if I go back, it's like right here, this is where market open was. Going into the morning, right, I was kind of like in a neutral bias, just really expecting not to take a trade. We can see there's actually a decent trade right at open. I'm going to go over that. So this trade right at open is in alignment with the fact that we have, right, this bearish SMT at the highs right here on both assets. We can see on the hourly chart right here, price is currently what we were disrespected this hourly bullish gap and are now respecting this hourly bearish gap. So we also tapped CE of the hourly bearish gap, just like that. And from this point, if you're bearish, you can expect price to distribute down to this major low right here. At this current point, right, we also had a 15-minute gap within the hourly gap get hit, which is an unmitigated gap, which got hit, boom, and we rejected cleanly off of. Go down to the 1 minute. You can see this is right when market opened. Price went higher. What do? We also swept out that internal high right there. Tap the 15-minute gap, tap C of the hourly gap. I'll just mark out the 15-minute for now. And then, right, begin dumping towards the downside. So from this current point, there was actually a 30-minute inversion, like right around here, where you could have taken your entry. It looks something like this. right? You can put your stop, low-key you'd have to put your stop hella high because that wick off open was like 65 points. And then you would be targeting these lows down here, which is solid because if you also look, we have LR built up, right? LR built up. We have LR built up to the downside, high resistance to the upside. But the reason why I didn't like this trade is simply due to the fact that you're targeting a high resistance low. Now, let's say, for example, right? We're playing a hypothetical here. This low was an unswept Asia low, or this low was like London low, and then there was an Asia low like down here. Then off open, right, we displace higher into that 15-minute gap within the hourly. I would so take this trade. Now, the reason why I faded this setup, right, it has everything except an A+ drawn liquidity. Now, this drawn liquidity is still decent, it being, these lows right here with LR built up, but it's a low that swept a low, high resistance, and we're kind of in choppy conditions on the higher time frame. So not that this is a bad trade, but I'm trading heavy capital. I only want to be taking A+ setups, especially to A+ draws. Now, once again, if our drawn liquidity in this certain point was like unswept Asia low or equal lows, unswept London, unfilled gap right below, I would take this trade 1,000,000%. But the reason why I faded this entry right here, even though it looks pretty clean, is just due to the fact that the drawn liquidity wasn't there. Personally, I would go break even at like this low right here, because realistically, let me see. So right here, I'd probably go break even. And yeah. So now I'm going to get into this trade right here, okay? Because this trade actually looks slightly better. So I'm going to go over my thought analysis. So at this point, right, I wasn't comfortable taking a short up here to this protected low, just due to the fact that I didn't feel like bearish momentum was completely confirmed yet, okay? That's why. If, for example, we had unswept liquidities like I just said and better draw, I would be cool taking more of an entry here. Now, after that entry began playing out, we can see price is obviously bearish and heading towards our protected low. So because now I see, right, bearish momentum is more confirmed to the downside, I was now looking for shorts. Also, ES is kept that low intact. Keep that in mind also, so there's no SMTs to the downside. That low is also intact on ES. We can see at this current point right here, it's 6:52, and in 2 minutes or 3 minutes, we're about to form a 5-minute gap. So what I was hoping for right here was for price to form like a 5-minute gap. We would retrace down into that 5-minute gap, get an inversion out of it, and then take an entry to this internal low, going break even at that low, or that high resistance low, going break even at that internal low. That's what I was watching for, right? We can see in the next 2 minutes, we actually ended up disrespecting that forming 5-minute gap, and we ended up only having a 3-minute gap at this point right here. Now this setup is good, right? This is a good setup, but I really just want to trade only 5-minute gaps at this current point. You can see this setup also is really good, as we have that that 15-minute candle form, and we have that SMT at this internal high right there. You can see put in that SMT, bang, just like that. We can see this is the exact high on the left right here that got swept out on ES, but not in Q. So we have a bearish SMT. Also, yeah, I missed it on this setup, but this setup also has another bearish SMT. You can see NQ swept it out, ES didn't. So we have, right, SMT on the higher time frame, SMT intermediate, and another SMT within this gap right here. From this current point, price absolutely dumps. So, right, this was actually honestly my most favorite trade of the day. Once again, I didn't take it just due to the fact that I was watching for a 5-minute gap. Looking back, really, I could have taken it. I'm gonna be honest. I'm just trading so much size right now that I want to wait for A+++ setups. Right, once again, if this was not a high resistance, I mean, at this point, the drawn liquidity is pretty confirmed. If this was like equal lows, I would be like more inclined to take it. But at this point, drawn liquidity is confirmed. If this was a 5-minute gap, I would 1,000,000% take this entry to this high resistance low. You would take your entry, right? You'd go for a 1-to-1 in this scenario. So stop loss would be right there. or stop losses right there, take profit right there, and you would play this out. Boom, right here we swept out the internal low, so you would go break even, move your stop to break even, almost get hit break even, and boom, it takes your draw, and that's a nice 1-to-1 risk to reward. So this was honestly my favorite trade of the day, right? In regard to this short setup up here, it's not bad, I like it, but I just don't feel like the draw on liquidity that confirmed the conditions weren't there. However, after we came down, confirmed more bearish momentum towards our high resistance low, I feel like this was a really good trade. Aligning with the SMT, the 3-minute con, and the 1-minute inversion, which has a fat displacement. You can see we inverse the tiny ass gap right there. This was a super solid trade. I just didn't take it due to the fact that we were nearing 7 a.m. and we were nearing 7 a.m. and we were about to form a 15-minute gap right there. So that's the reason why I didn't take it. If this was a 5-minute con, I 1,000,000% would have taken it though. I remember at this current point, even though he came down, right, we were about to hit 7 a.m. right here, and 7 a.m. was going to form a 15-minute gap right there, and I would have been really, really cool taking a 15-minute gap retracement to that high resistance low. So that's what I was watching more for right there. You can see right here, what I was kind of hoping for was that this displacement would fail. We would go up, right, tap into that 15-minute gap after 7 a.m. and then get real displacement towards the target. I just didn't really expect us to distribute that heavily. Also, us being within that 3-minute, I wanted to see like a 5-minute or a 15. So pretty valid analysis there if you ask me of the reason why I didn't take that gap. Then we can see from this current point, price just absolutely started dumping face, right? Now it's like, okay, we're dumping, where are we heading towards? Where we were heading towards was this prominent previous day low, this prominent wick on the hourly time frame. So I'll mark that out as previous day low. And if you know, previous day low, previous day high is really, really good draws on liquidity, especially when we're displacing out of a gap, high time frame SMT, and have good momentum towards that draw. This is a very, very good area to target for price. Dropping down to the 15-minute time frame at this current point, all I wanted to see was price retrace into this 15-minute gap, then get inversion out of it to previous day low, right? Something like this. Let's watch how that turns out. We can see price goes back, trades into that 15-minute gap. Right at this point, ES is also within that 15-minute gap. Boom, just like this. And we have a really, really nice 15-minute candle PO3. We went higher, put in that top wick. We can look to reject from this current point. Now, right here, we began, right, displacing towards the downside. At this current point, I was not sold on taking a short because we did tap into the 15-minute. We did get displacement, but this is a bad short to take due to the fact that in 3 minutes here, right, we're about to form a new 15-minute candle, which most likely is going to have an internal stop hunt before taking us higher. If you kind of look at the momentum, this honestly is pretty strong momentum into a continuation, especially into a 15-minute gap. Usually you want to see more price structure like this. Boom. Then you get a nice inversion, right? Then you take your entry. So discretionarily wise, I just didn't like this reaction right here, right? I just felt like especially with like these slanted highs, that this is like a fake out and that we're just going to go up with this new 15-minute candle, right, form that new PO3 and then get the real move to the downside from this current point, form, you know, more structure, nice lows we can also target as break-even points, and then ultimately deliver us to the draw. So that's why I faded that right there. You can see that obviously did not work out. And that was actually a 4-minute inversion. So I know a lot of people took that entry right there. That was the reason why I faded it. I just, or just whatever. I just didn't like the overall momentum into the continuation. I also didn't like the fact that we didn't really have lots of LR built up. Didn't really have, you know, lots of structure. And also we went high, but we didn't stop hunt anything on the left here. So whenever we don't stop hunt anything on the left, you want to see internal stop hunts. Especially in alignment with 15-minute candle. You can see we just opened the new one, new 15-minute candle PO3, with it being 7:30. what I want to see is price, open, maybe form a little wick, down, go higher, and then get the real inversion, which would formulate that candle to look like this. And from this point, if the 15-minute candle looks like this, we can expect a distribution lower. So that's kind of what I want to see in alignment with the stop hunt, in alignment with tapping like possibly even C of the 15-minute gap at this point. That was my A+ scenario. We can see ES also already is within that 15-minute gap, so that's pretty good. We end up getting that PO3. As you can see right here, price goes down, right, forms that bottom of the wick. I'll kind of go like this. Right, forms that bottom of that new 15-minute candle, goes higher. What do? Manipulate the highs right here. Manipulate the highs on both assets, which is really, really nice. Then from this point, right, form one more. I was simply just looking for an inversion right here, and I was going to take an inversion after we break below, stop loss at the high of that 15-minute candle PO3, take profit at the drawn liquidity for a 2-to-1 risk to reward. You can see we also left an unmitigated 5-minute in the leg right here, which is our internal kind of draw. So I was going to go break even at that internal 5-minute. Because realistically, if we're going to go down inverse and then tap the 5-minute and then go higher, there's most likely a chance that that 5-minute is going to deliver us higher before we end up going lower, which is our high time frame narrative. So if that's the case, I want to get out at break even if this happens. Then if we decide to go higher and get like another inversion, I would be willing to take that again, but I wouldn't be out for a loss. So I was going to go break even at that internal 5-minute, like right here. We can see, right, all I want to see is a strong displacement through, kind of something like this. Take my entry, boom, just like that. And this was what I was watching for. We can see this candle actually technically inverses the 1-minute, but I did not like it at the time just due to the fact that we formulated that wick. What I've seen is, right, this wick is bigger than the body of the candle, which shows the inversion was slightly weak. From this point, we could have expected another manipulation and then the real inversion, possibly even a 30-second inversion, and this be a built up of LR for that scenario. However, I just didn't feel comfortable taking this 1-minute gap or this 1-minute inversion right here just due to the fact that we formulated that wick. I did say in live time if you formulate one more candle like this, I would take that as my entry, but at this current point, I wasn't sold on shorts. Next candle comes, fucks around, doesn't do nothing. Next candle, fucks around, doesn't do nothing. At this current point, I was said to myself, okay, right, this is a super weak inversion. I'm just gonna wait for a remanipulation of the highs, get the real inversion, and this would be a nice built up LR basically to target. This would be LR leading into that 5-minute gap, which is really, really solid, and that's what I was watching for. Then technically there's the inversion, there's the CISD, but it's a really bad inversion at this current point. Let's say you did take an entry right here, right? Once again, you go break even at the 5-minute, and you get stopped at break even. Right here at this current point, right? This candle looked like it was going to deliver us higher. I was willing to take stop hunt like this. I was willing to take that to deliver us lower because narrative wise, I knew previously a low was going to hit. Entry wise, we just didn't end up taking it. It was really bad delivery. We took it, but if you entered off this candle, you would have gone stopped at break even. We didn't get, manipulation of the highs right there, so I wasn't able to take another entry. And any entry over here is super fried just due to the fact that we have ascending, or we have like wicks basically at your stop. So any entry taken in this leg down is a really bad entry. But narrative wise, I really want to see previous low get hit. We ended up delivering without an entry. It is what it is. That's how it goes. So that's today's recap. Once again, April 7th, break even day, 0 trades, 3 potential opportunities. My favorite opportunity once again was this trade right there. But it's just unfortunate we delivered to our target without giving me an entry that I really, really liked. It is what it is. I felt like I traded super smart today. I felt like I traded really good. It's just about being patient, waiting for setups to present. And once again, break even day on the 19 accounts. As soon as I hit one more winning trade, I'll be able to get a payout on topstep, and then I'm gonna get an additional 20 accounts. So yeah, really looking forward to that. Overall W day, boys. We stayed patient, we did what we had to do, and we'll be back to it tomorrow. Catch y'all then. Let's get it.